All right, before we jump in, just the usual heads up. This is all for educational purposes. It is not financial advice. All right, welcome back. We're looking at PLSM, day 141, and the theme today is really steady building. Not every day is about massive price swings or some huge headline. Today was one of those quiet, fundamental strength kind of days where the protocol just put its head down and got to work. So let's dig into the numbers and see what that looks like. So taking a look at the snapshot for the day, it's green all around, which is always nice to see. PLASM ended up a little over 2%, right around 4.7 cents. And eShare, it had a nice 1.3% gain, holding that line strong above $9. Just a calm, positive day for both tokens. This daily scorecard, this is where the real story of day 141 is. Just look at it. All green arrows. Every single fundamental metric. Every single one moved in the right direction. Burns are up, staking's up, bonds are up, yield is up. No exceptions. This is what a solid building day looks like. Okay, so let's get into the mechanics behind that growth. First up, let's talk about the protocol's main deflationary engine, the burn mechanism. So the total number of PLASM tokens that have been burned, just gone forever, now stands at 1.54 million. And that keeps the total burn rate firmly planted at that huge 20% milestone of the initial supply. And to put that into perspective, it was only 4 days ago, back on day 137, that the protocol even crossed that 20% mark. You can see it right here, just this clear, steady progression day after day. That's exactly the kind of health you want to see. So, what's the big takeaway here? It's this. In just the 4 days since hitting that major milestone, another 100,000 plasm have been burned. That just shows you the burn engine is relentlessly, consistently taking tokens off the market and strengthening that foundation. And remember, these burns aren't just magic numbers. They're fueled by real capital. We're talking over $48,000 in USDC that the system has deployed to buy plasm right off the open market and just, poof, burn it. And look at that, we are getting really close to that $50,000 milestone. Okay, now let's see how this builds out with the other key defenses. On the staking side, another 20,000 plasm got locked away, bringing that total up to 2.87 million. And at the same time, 59 new bonds were bought, pushing the total bond count over 9,100. Both of these things just absolutely crucial for long-term stability. And that steady climb in staking, well, it's putting a huge milestone right on the horizon. At this rate, we're probably going to see the total stake to supply cross 3 million plasm in, maybe 6 or 7 days? That's going to be a huge psychological level for everyone watching. Now this slide, this is where it all comes together. You take this staked supply, you add the burned supply, and you throw in the tokens in the liquidity pool, and what do you get? A total protected supply of 77%. That means only 23% of the supply is actually liquid. That is a seriously powerful defensive posture. All right, let's shift gears over to the yield engine. Another $694 in profits were claimed today. That brings the grand total to almost $86,000. You can see that $90,000 mark getting closer and closer every single day. And the total capital the system has deployed, between the buy and burn that takes tokens out and the buy and build that strengthens the LP, that number is about to cross $70,000. And it's so important to remember. Every single one of those dollars is real capital being used to make the protocol stronger. Okay, so all of this steady building, this quiet day in, day out accumulation of strength, it's all happening right before a massive shift in the tokenomics of this protocol. We are on the absolute verge of a major supply squeeze. Yeah, today's token release was pretty moderate, but the real story isn't about today. It's about what is coming in just 4 short days. You have to see this. So look at the 7-day forecast. This shows you exactly what's coming. After another light day or two, look at day 144. It drops to just over 2,000 tokens. Then the next day, day 145, 868. And believe it or not, it gets even more extreme from there. Because on day 146, the protocol is going to have its all-time record low release day, only 750 plasm for the entire 24-hour period. To put that into perspective, that's less than the protocol often burns in a single day. And this chart just illustrates that dynamic perfectly. Let's say, just for argument's sake, 30% of those 750 tokens get sold. That's maybe $11 of potential sell pressure? Meanwhile, the buy and burn system is going to be deploying over $1,200 of buy pressure. I mean, the defense is just going to be absolutely overwhelming.
So let's bring it all together. What's the final verdict for day 141? It's all about building a solid, strong foundation right before a major event.
The verdict couldn't be clearer. This was a steady builder day. And the most important part, that countdown to the near zero release phase, it is active and it is very, very real. So let's run through that final scorecard one more time. Price, check, positive. Burns, climbing past 1.5 million, check. Staking, marching towards 3 million, check. Bonds, steadily going up, check. 77% of the supply protected, big check. And the kicker, just 4 days until releases drop below 1,000 tokens. It is a sea of green with a massive catalyst right on the horizon. No fireworks, no drama. Just 30,000 more burned, 20,000 more staked, 59 more bonds, $694 more in yield, every single metric green. Every day, building. And in 4 days, 868 tokens, then 750. You see, the building phase doesn't need headlines. It needs consistency. And day 141 delivered. Hey, thanks for tuning in for this breakdown. And just one last time, please remember, all of this is for educational purposes only. It is not financial advice. Never, ever invest more than you're willing to lose. And please, always do your own research before you make any financial decisions.